Big miss. I know you were expecting as high as 6% for growth. What do you think happened?
So the result looks weaker than we expected. But if you look at the detail of the data, it's not very bad. First of all, household consumption was stronger than we expected, and it certainly shows a strong rebound. And also, secondly, export turned out positive. We expected the export would drop, especially to China, but the result was not very bad. So the main reason why we had this weaker than expected result comes from the decline in government spending, and particularly public investment, partly because there's a labor shortage in construction sector and rising construction material prices.
So I got to ask, I mean, looking forward for the current quarter that we're in, the setup does not look very positive, either on the consumption or on the capex side.
Yes. So certainly in the January, March, I think the outcome will not be very good. Still, I think real GDP growth will be positive, but much weaker than 5.4% recorded in October, December. It's because this growing number of infected people, and government, introduced some moderate restriction on opening hours at the restaurant and bars. So certainly January, March, we will see a deceleration in economic growth. But I think strong recovery will start from April.
Shirai-san, if economic activity is gaining momentum, and if there is momentum in the post-pandemic recovery, then does this mean we start to see demand pull inflation, and does this get us any closer to 2% inflation?
Okay, so demand-driven inflation is very unlikely. If you look at the wage data, it's just stagnant, both nominal and real, and very different from U.S. cases. So we don't really see a very strong, continuous consumption growth. So I think, inflation is mainly coming from commodity and external oriented factors and not coming from demand side.